Good evening, everyone. Thank you so much for joining us tonight for the first time homebuyer workshop. In this, for the sake of everybody's time, we do want to start the webinar promptly at 6 p.m. We have quite a few people on already, and so I'm anticipating that more and more people will be coming in a few minutes. Your microphone is muted for the presentation, and we ask that you do use the chat feature. And I'm Terry Conley, and I'm going to be facilitating for tonight. So I will be monitoring chat for the group. So for tonight's workshop, we have 3 people on our panel. We have Ryan Campbell, who is a mortgage originator with Triangle Credit Union. He's going to be talking about how to pre-qualify and apply for a mortgage. Kathy Snyder from the Snyder Realty Group is going to be talking about what to expect when searching for your new home. And then Bob Parodi is going to literally close out things for us, and he's going to be talking about final steps to closing your mortgage loan. So again, we're going to be going through these presentations. As you have questions, we're going to, please use the chat feature. And at the end of the presentation, we'll go back and we'll address anyone's questions at that point. So this is our team. And Ryan, Kathy, Bob, thank you so much for joining us for tonight. And then I'm going to go ahead and I'm going to ask Ryan to unmute and take it from here.
Yeah, thank you very much. So thank you again for, all of you guys for taking time out of your busy schedules to be here with us tonight. Like I said, my name is Ryan Campbell, and I am one of the mortgage originators here at Triangle Credit Union. I started out in the mortgage business in about 2005 and have been with Triangle Credit Union now for about 5 years. It's the second year in a row that I've had the opportunity to be a speaker at our first time homebuyer seminar, so I'm happy to be back. I was drawn to mortgages originally just because I like problem solving and helping people, and this job keeps me challenged. It's very rare that 2 loans are the same, and so there's always something different. On a personal level, I'm a pretty boring person. I have 2 younger kids, so most of my life revolves around just doing whatever they want to do. But this year we are starting beekeeping, so that's kind of one of the we had a hive in Florida when we lived there, and we're starting one up here, so that's kind of one of the things we got going on this year to kind of keep things interesting. So to get into the process of doing the mortgages, for many people, buying a home is really a big milestone or goal in their life. Now, maybe it's not as important as getting married or having kids or landing your dream job, but for most people, I think it probably falls into one of their top 5. But I guess the question is, why don't more people buy then? And I think a lot of it comes down to fear. A lot of people might say that buying a home is extremely complicated, which might scare some people away from going into the process, thinking that it might be too confusing for them if they're not familiar with the process. My hope tonight is that this presentation will help to ease some of those fears by kind of simplifying it down and showing the steps from start to finish on what you can expect. So one of the most important things I think is going to be, in order to be successful, having the right team of people to advise you and educate you is going to give you as a buyer a huge advantage, making sure that you get the deal that works for your budget and for your short and long-term goals. All the speakers here tonight are great. They've all been doing this a really long time, and they're all experts in their field. So you're going to get a lot of, I think, really helpful information. Now, the first step for applying for a mortgage, you're going to meet with a mortgage originator to start the process of the application. And a mortgage originator like me is going to be one of your first steps, because before you go out shopping, the main thing people want to know is, what can I afford? So this process is going to help us to start narrowing it down to what your budget can support before you go out looking for homes. It's kind of the same process as anything else you do. Grocery shopping, buying a car, you're going to say, what can I afford? What's my budget? What am I comfortable spending? And you're going to apply those same type of principles. So step 1's important because really what it does is it gives us the opportunity to really start getting to know you by collecting a lot of basic info and getting it put into an application. Now, the application gives the mortgage team kind of the meat and potatoes. We're collecting things like your name, your address, where you work, how much money you make, and what assets you have for a down payment or closing costs, which is only one kind of piece of the puzzle. Obviously, the goal is we want to make this as easy for you as possible. And one of the ways that we do this is by doing all this upfront work and collecting all this data, we make sure that we address any problems early so that there's no surprises later on in the process. So one of the biggest things that I get phone calls on is when we go to discuss payments. So most of the calls I get regarding new mortgages, people call, and this one's a little tricky because most people call and the main thing they're concerned about is how much can I get approved for? So I guess my challenge would be try to look at it as how much can I afford based on my lifestyle versus what we can approve you for on paper. Being approved on paper sometimes can be a lot different than what you might be actual comfortably pay per month, like out in the real world. Because the application that we take, it gives us a lot of information, but it also doesn't give us everything. Some people have very expensive hobbies. Some people like to travel. I know during the pandemic, I've seen a lot of people that, have told me that they, send money to family members, either overseas or locally, to try to help them out. And the further that you stretch your budget when buying a home, you'll just need to consider, are you willing to potentially make lifestyle changes in order to make this mortgage fit within that budget? So obviously we want to make sure we can do everything we can to help. So the main thing I tell people is we don't really want to see the perfect first date version of you. We want to see you're 6 months into the relationship and you're in sweatpants. And the reason for that is buying a home is a long-term commitment. So it's important that this loan helps you to achieve not only your short and long-term goals for success, but it's also hard to admit sometimes how much you actually spend and making sure that you pick a payment that works for you. My wife's an amazing chef, but I eat out probably a lot more than we should. And that's something that would have to be factored in. My kids like macaroni and cheese and hot dogs, and I can't eat that every night. So sometimes it's easier to order out than it is to make 4 different meals. And that would be something to consider. If you eat out a lot, that wouldn't show up on a credit report. That wouldn't be something that we would see as part of your application. So you know yourself better than we ever will. So making sure that you're open and having that communication with us is really important. So next slide, please. So depending on your financial situation, we typically have a few different products that might work for you as far as ways we can do your mortgage. One of the most popular, or one that's been popular for a while and has gained even more popularity in this market, is Triangle Credit Union's First Time Buyers Program. And this program gives you some advantages over a conventional mortgage. And the first one that I'd like to touch on is terms up to 40 years. Now, I don't know many people who would want to have a mortgage for 40 years, but it doesn't have to be. We could do a 30-year, a 20, a 10, the term we can change up on it. And the second point is I look at it more of like a strategic tool to help you get into the right home. Most companies don't offer a term that long. And the advantage of the longer term is that obviously the longer that we stretch out the loan, the lower the monthly payment would be, which could either increase your buying power or keep your monthly payment at a payment that you are more comfortable with. As little as 3% down, this is a huge advantage. A lot of people pay rent. Rent probably in most cases is on par for what you would pay for a mortgage. The thing that separates a lot of people from being able to buy is coming up with the amount of money for the down payment. Now, if we're just using I guess, an easy math that we can do in our heads, if you were looking at a house for 400,000, you'd only need about 12,000 down. But if you were going with a conventional 30-year fixed rate mortgage, you'd need 5, which would be about 20. So that's about $8,000 less. And maybe that gets you where you don't have to wait another year or two. You might go from being able to say, well, oh, I don't think we can buy this year, to all of a sudden now it's a reality. Triangle Credit Union also offers $1,000 towards your closing costs, which is another huge thing. That's $1,000 less that you would have to come up with. And every penny does count when it comes to this, because there's a lot of money that traditionally goes into it. One thing that's not on this slide, this loan is a 5.5 adjustable rate mortgage. So your rate could fluctuate over the life of the loan. The first 5 indicates how long you have until the first adjustment. So on the 61st month is when you would get your first change. Right now, with the way mortgage rates are, the 5.5 ARM is significantly lower than the rates that are being offered on 30-year fix that we've seen from lots of other companies. So between getting the longer term and the lower rate, it's a big advantage. At the end of the 5 years, when it does change, the loan would then readjust, and then you'd have 5 years until another change. Now, this can seem a little bit scary, but if you think about it, this is probably going to be your first home. More than likely, you might be in the neighborhood you want, but the home may not be perfect. It may not be the exact home that you wanted. In a few years, you're probably going to be able to decide, is this a place I want to stay? And if it is, more than likely at that point, you're going to want to put in your dream kitchen, master bath, and will more than likely will be refinancing this loan to get cash out to help fund some of those projects. So in a lot of cases, these loans don't even make it the full 5 years, and some members never even see an adjustment. Or maybe this was a starter home and family's grown, and now you're looking to upgrade, and you'd be selling the property, and the loan gets paid off, and once again, never make it to an adjustment. So definitely something to consider. And when you're working with us, this is something that obviously we could run scenarios multiple different ways so that you could kind of see the pro cons of all the different products that we offer and how they would affect your unique situation. Next slide, please. All right, so this kind of gets you into just some of the stuff that you would need to bring. I have a lot of people that come in with nothing, but if you want to be thorough and you want to make sure that we can get you an approval that we feel confident is going to stick, being prepared and doing a little bit of homework is helpful. Depending on your situation as far as where your income comes from, whether it's W-2 employment, self-employed income, Social Security, retirement, will kind of determine what items you need. But the most basic stuff is typically a most recent pay stub, 2 years W-2s, 2 months bank statements, and this would be kind of from any accounts that you have. Sometimes people have multiple accounts with multiple financial institutions, so we'd want to collect up to pool all your assets to see what we had to work with. And then most recent statements from any 401ks, retirements, 403bs. If you're self-employed, we would need tax returns and potentially year-to-date profit and loss statements to help verify income, because it's not as cut and dry as somebody who just has a standard 40-hour a week with a W-2, that receives a W-2. Next slide, please. All right, so in a perfect world, congratulations, everyone has been pre-approved. Pre-approval is kind of tricky. I've worked for a couple different financial institutions, and one thing I would caution you on is not all pre-approvals are the same. Here at Triangle, we do a little bit more of a thorough pre-approval than some places. In the end, it's the same amount of hoops to jump through. We just make you jump through a few of them earlier in the process. And the advantage that has to you as a buyer is we get to see a lot of this stuff up front. And that way we know when we're sending you away saying that you can be approved for a certain dollar amount, we can be pretty confident that that amount is going to stick and that you're not going to get surprised later. I've had people call me and say, oh, I got a pre-approval from some other bank, and and I say, well, did you fill out an application? They say, well, no, I just talked to them on the phone. Well, that's great. They got your pre-approval really quickly. The thing that can be scary is if you go out and you do find your dream home, once they start pulling credit and collecting your pay stubs, that deal could easily change, and that can be a little bit scary. So And another thing too is if you're not pre-approved, don't take it as a bad thing. Um, Not being approved for a mortgage isn't necessarily a negative thing. What it's going to do is it's going to basically show us what we need to do in order to get you to a point where we can get you approved. So um, we have a lot of people that they do it and we pull it, and maybe it's a credit issue. Maybe they just need more saved up for a down payment. Maybe we do get you approved, but maybe it's not the dollar amount that you needed. I know when I moved back up here from Florida, that was my biggest issue. Was I wish that I knew about the 40-year mortgage then, because we couldn't qualify for the magic dollar amount that we needed to get into the neighborhood we wanted. So we had to wait a couple more years and keep saving. If I knew about the 40-year, could have kept my payments lower, and there was a chance that maybe I would have been able to get up here a little bit quicker. But yeah, so don't be afraid to try, because if home ownership's important and it's something that you really want to make happen, the only thing you can do is try. It's going to set the bar for what we need to work on, and then at least we can help you over the next 6 months, a year, or however long it's going to take to come up with a game plan, so that you're focusing on making sure that all of your efforts are going towards that home ownership, which is the ultimate goal. Next slide, please. All right, so now is the time to go shopping for your new home. So I know Kathy's going to be coming in a little bit to do the real estate portion, but this is when we're not completely done with you, but we kind of hand you off at that point. We know how much you can be approved for. You're now going to go to your realtor and say, look, I can be approved for this, and they're going to start putting together homes that you can look at in that price range. Next slide, please. All right, so obviously out there, the market's pretty competitive. You may make one offer, you may make 2 or 3, but eventually, hopefully you get an accepted offer, which means somebody has agreed to sell you the home for the price that you've asked. Next slide, please. All right, so once your offer is accepted, that's when we kind of get involved again. Now, during the process, it's good to always keep communication with us on what you're seeing out there, if we need to make any adjustments to your pre-approval. But you will meet with us again after you have the accepted offer, and that's when we would kind of discuss and walk you through the final steps in the mortgage process. At this point, you're typically getting ready to have the property appraised and have a home inspection. At this point too, we're also having you bring additional documents. Now that we have a specific property, there will be another list of documents like the deed, copy of a tax bill, things that are more specific and pertaining to that property. This is also the point, once you have an accepted offer, that we can re-review the mortgage product that you were in, because if it takes you a month or 2 months, interest rates may have changed during that time. You may want to reconsider or switch up your products. And this is the time that we make those final adjustments to make sure that it's tailored and fits exactly what you're looking for. Next slide. And so that is kind of the end of the mortgage segment. I'm going to pass it off to Kathy, and she's going to go over now what you will work with her as a realtor.
Good evening, everyone. My name is Kathy Snyder. I'm the broker owner of the Snyder Realty Group, serving New Hampshire and Massachusetts. I've been doing this gig for about 20 years now, and this is an exciting time for all of you. Congratulations for taking the first step in what to expect when buying a new home. This is a big topic right now, what's going on with real estate. It's certainly, it's a frenzy out there. It's kind of unhinged, but, you can definitely get pre-approved, and we can definitely help you find a home. So I'm just going to run you through what you can expect when you get in the market and you work with your real estate agent. Next slide. So first of all, it's important to know who's who in the business of real estate. So there's a mandatory agency disclosure that you as the buyer should be presented prior to viewing any home. This is very important. This is a document that's required by law, and it is supposed to tell you who you're talking to when you look at a home. So there's 3 buckets, I'll say, for agents. So you're all probably familiar with the listing agent, which has the sign in the ground, and their job is to bring a ready, willing, and able buyer at the price and terms and conditions that the seller would like. So if you're working directly with the listing agent, you would want to take care, as they have a fiduciary to work in the best interest of that seller. So they're also known as a seller's agent. And then you have the buyer's agent, who actually works in your behalf, and they work in your best interest, and they maintain confidentiality, honesty, loyalty, trust, and all that good stuff to swing in your favor. So when you are looking at these homes and you're trying to craft an offer and you're not sure what to do, and if the house is priced correctly, that's where your realtor comes in and helps you make your best informed decision on all things, so you don't have buyer's remorse or feel like you bought a product or a home that wasn't the best fit for you. And then there's a facilitator. I'm sure all of you have been on the phone and maybe looked at Zillow a time or two, and then you get harassed with a million realtors calling you. So those are what we call facilitators. It's an agent who doesn't represent a buyer or a seller. They're just out there introducing buyers to properties, and they work for a fee. They don't have to be bound by a contract. And, they're there just to bring a ready, willing, and able buyer to the table. Now, a facilitator really doesn't have any skin in the game. There's no protection. And, so that one, it's easy for a realtor to skate by on facilitator. But again, you need to know who they are when they introduce themselves to you and what type of agent they're acting as. So obviously, when you meet an agent for the first time, you don't know them. So you're certainly not going to have them be your buyer's agent. They're going to most likely be the listing agent, or they're going to be a facilitator. But that's your opportunity to maybe ask questions and see how you feel about the engagement with this agent. And is this somebody that you feel confident and maybe could build a relationship of trust that could get you into the home that you want as your buyer's agent? So that's a little bit about agency. So again, when you meet with an agent, you should be signing that agency disclosure. That's going to be the true professional. And that's, a good sign that would be somebody that has integrity and they are playing by the rules. And, that would be a go and a plus for me. So next slide, please. So once you have your approval from Triangle and you're ready to go, we sit down with you, your agent will sit down with you and try to identify what it is you're looking for. We work within the parameters of your pre-approval. We try to open up opportunities for you with that 40-year mortgage, have discussions. Would a 40-year be better than a 30-year? What's your motivation? Are you planning on staying in the home for a couple of years? Why are you buying? All of that helps us figure out the best way to go for you. So understanding the numbers and what you're trying to accomplish is also going to be a critical component for you to find your best home at the best price that you possibly can. So we work pretty closely with your lender. We set up your criteria. Now, as you probably all are aware, the market has very low inventory, which is what's creating this super high seller market. We're moving into the spring. We're hoping that once spring arrives, that, all of those sellers are going to be a little freaked out by the interest rates changing. And maybe they're thinking, oh my gosh, this ride is over. We better get our house on the market right now, because, we're never going to get a better deal. So we are anticipating, hopefully, a strong spring market where you're going to have some options and maybe kind of thin out that, multiple offer situation, which is creating the auction at the offer. So basically we'll set up those homes based on your criteria. When you get to the home, we want you to go in, we open up cabinets, kind of explore, visualize your things in the home, look at the neighborhood. You're only going to have one shot to look at this house before you're posed with, do you want to make an offer or not? That's not a perfect world, but it is the world that we're living in right now. So my job is to paint a picture of honesty, so you can be best prepared. So right now, a lot of realtors, due to coming out of COVID and having to adjust with how do we show homes, a lot of realtors are listing homes on a Thursday evening, and they're blocking agents from showings until the weekend. And they're usually doing an open house kind of tour where all of these buyers show up at a house within a 2 or 3 hour window. And that will be your only chance to get in the house and make an offer. No fun, I realize this, but we have to adapt. And due to the demand, sellers, it's just easier to open the house up for this time frame and let everybody in at once. And then everybody, of course, at the open house are talking. You're feeling this anxiety. You're feeling like, oh my gosh, I'm never going to win. A lot of people will be like, forget it. I'm not even going to make an offer. I'm not going to be able to get it. So it really kind of messes with your energy, and it creates this feeling of anxiety and stress and pressure, which is no fun for you as the buyer. So if it's possible, I try to get you in for a private showing so you can relax and not have to deal with, all those outside pressures. But keep in mind, we may not be able to get into homes unless they are at the open house, which is just another problem that we're dealing with in this crazy competitive market. So once that listing hits the market, come Monday or Tuesday, they're reviewing offers. So if you're not around for that open house weekend or you're traveling, most likely when you get back, that house will be sold. So the market is only holding on to homes for, 3-4 days, 5 max right now. So there is a lot of pressure on you as the buyer, especially if you find a home that you really love. And if you find a home that you really love, after working with Triangle and, we run the numbers, we make sure it's affordable, and we try to, put forward your best offer. So that moves me right into making that offer. So we sit down with you. I would go over what has sold within that area. Do I agree with that listing price? Because, we all have opinions on pricing. If you were someday my seller, would I list that home for that price? So we have to get clear on, does that listing agent currently right now have the right price on that home? I could do the market analysis for you, and it could be 50,000 higher than what I'm seeing as a list price. So my recommendation to you would be, hey, in my opinion, based upon facts and data, I think this agent really underpriced this house. So you might have to go to this number, but I'm going to guide you in that scenario, and I'm going to give you solid information so you can see it in black and white, and you'll trust these numbers as much as I do. So you have to get clear. What is the value of this home? What should you pay? And at what point are you now overpaying? And are you willing to overpay? 5, 10, 15, 20,000. I'm seeing offers with waivers up to 50,000. So it's really intense right now. And I'm not suggesting you waive anything for 50,000, but depending on your motivation, maybe you want this house. Maybe you're going to use that 40-year product because you're going to stay there for the next 30 years and you're going to raise your family and you want to stretch that payment out. Well, maybe at this time it is a good deal for you. And so we get really clear, what works for you within your budget to make your best offer, because you're only going to really have that one shot. So a couple of things going to come down to your offer. So first of all, we write a purchase and sales, It's 5 pages. It's created by attorneys like Mr. Parodi, and they give us realtors the opportunity to draft and fill in some blank spots. We're not allowed to practice law, but we fill it in and we send it off to you for signature. So in that purchase and sales, you're going to state in there how much you're willing to pay for the home, earnest money deposit. This is how much you're willing to give to the seller, to the listing agent. They hold the funds in an escrow account until you're ready to close, and then that money credits back to you at closing. A lot of buyers are going, way overboard on earnest money deposit because that shows intention that you're very serious about this property and you're willing to risk, $10,000, $20,000 because that's how confident you are that you're going to close, and not, walk away for some, whatever reason, flaking out or whatever you want to call it, nerves. So that earnest money can come into play and help you make your offer look really strong. Inspections are a hot topic. I myself don't encourage anybody to waive a home inspection. You're buying sometimes a $500,000, $1 million home. I would prefer you to do an inspection just to make sure that you are understanding what you're purchasing. But if you choose to waive your inspection, you can do that. If a seller is really transparent, they understand that a buyer is dealing with the issue of waiving inspection. So a really good seller will have a lot of data for you to look at to maybe provide a little comfort that that seller is being honest and transparent. And it might be enough information that you feel comfortable waiving the inspection. But again, we'll have to review all of that and determine if that's something that you feel good about. So you can waive an inspection, or you could do something that says, hey, we'd like to do an inspection, but we're not going to negotiate anything that's less than 5,000. We just want a little insurance here that if anything is over a certain amount, that we have the right to renegotiate or walk away. So you can do what we call a value gap in that home inspection, just to kind of give you some warm and fuzzy, so you're not risking it all. The next contingency on the contract is your financing. We disclose to the seller what your financing looks like. So if you're doing, a conventional, which gratefully, I have to just point this out, Triangle only gives conventional loans, which is a huge bonus, because to get that 3% down payment, the only equivalent kind of product would be FHA, and FHA isn't too popular with sellers right now just because of the frenzied market, and they're getting offers without FHA. They're getting the conventional buyers, and in theory, to a seller, the way the listing agent will present is a stronger buyer. So the fact that you can utilize a conventional product, at a 40-year or a 30-year term is awesome. So that's going to put you already above anybody that's an FHA buyer. So that's a fantastic financing option. We're going to say if you're putting down 3%, 5%, 10, whatever that amount is. And then unfortunately, due to the market we're in, you have to address the appraisal at this time of your offer. You actually have to say to the seller in writing what, because buyers are going so high over the list price. The seller gets an offer, say their house is listed for 400, somebody offers them 500,000, and they really want that 500 now. You waive the carrot, they want it. How are you going to give it to them? So I'm telling you, based upon the market analysis, hey, I can only get this appraised for maybe 420, 430. So if you're going to go to 500, we're looking at a shortage. The bank's only going to give you what the appraised value is. So what's going to happen to that money, to that, that gap between, 75 and 80,000 to get to that $500,000 number? Because a buyer can offer a seller anything, but at the end of the day, can they perform? That's what a seller cares about. So it's up to you to tell the seller, can you actually perform at what you're offering? So that buyer, you as the buyer need to say to the seller, you know what? We'd like to give you 500 because we really like your home and we're going to be there for the next 30 years. And to us, it's worth it. We know it's only going to appraise for maybe 420. We can't actually dig into our pockets and give you an $80,000, check on top of closing, but maybe we could give you 10,000 over the appraised value. That's the most we could do. So you're addressing the concern to the seller in the best way that you can. Yes, some buyers could be able to waive it all and pay that seller 500, hey, great for them. But you have to work within your criteria. So there's a lot of pressure on you as the buyer, as your agent, to really work and understand what you're offering and how to get your offer to look its best while still protecting you in the long run. So it's a little tricky right now, but if you, if you've got the right financing, you have the right agent working for you, we can definitely make it happen with full disclosure and honesty about what you're going to be facing in the market. So, and that market is going to be changing. What's happening right now is going to change next month and every month, from here until June. So we can't predict the future, but right now it's looking pretty hot. And I expect that maybe to cool off come June or July a little bit. So I appreciate the opportunity to be on this call with you guys tonight. I wish you all the best. This is exciting. Buying a home is such a great time. And if you need anything at all, you can certainly reach out to me. I'd be happy to help. And thank you to Triangle for allowing me to be part of this discussion.
Uh-oh, it's on me. Hello?
We can hear you, Bob.
Thank you.
Oh, and
My name-
Kathy, well done. Good job, Kathy.
My name's Bob Parodi. I'm an attorney in Nashville. I've been an attorney since 1978, and I've have the privilege of doing work for Triangle for over 30 years now. It's a wonderful institution. I don't think you're going to find a better lender to work with than Triangle. And I have to say, Kathy, that was a very nice presentation. Kathy is up on what's happening in today's market. And she makes a lot of really good points. And I'm going to echo one of them, which is the inspections. It's really, in my opinion, not a wise idea to waive the inspections unless you have pretty intimate knowledge of that particular piece of property. And so when Kathy puts together that purchase and sales agreement, it's going to have the sale price and the deposit and hopefully the inspections. It may have some contingencies. And the biggest contingency it's going to have is your financing contingency. So assuming you have a signed purchase and sales agreement, you are then going to return to Ryan, and Ryan is going to take your loan application and he is going to prepare what is known as a loan estimate. And that is part of the closing process, that loan estimate. And I'll explain that a little more in a minute. So once you have the P&S and the loan estimate to Ryan, they're going to send over to me the purchase and sales agreement and a title examination request. And the first thing that my office does is we examine the records in the Registry of Deeds at City Hall to determine the status of the title. We want to make sure first and foremost that the sellers have the legal title that they are willing to sell to you. Now, usually that's not an issue, but sometimes it is, and that is the very first thing we do. Once we have the title examination done, we issue an opinion, and we send it back over to the credit union. Usually there is no issues with that other than we know who the seller may have a mortgage with that we have to pay off, etc. The credit union is then going to issue closing instructions to us once they are ready to move forward with the loan. They will be ready to move forward with the loan once they have all of the conditions of your approval met and once they have their appraisal back. At that point in time, we will then schedule to do a closing between the buyer and the seller. The closing is a multifaceted it's multifaceted. And the first thing we do is we prepare a deed pursuant to the purchase and sales agreement. That is the document evidencing title to you. That'll be recorded in the Registry of Deeds. If you're in Nashua, it would be Hillsborough County Registry of Deeds. So similar to a car, your deed is title to your real estate. We then prepare a promissory note. The promissory note is your promise to the credit union to pay the loan on the terms that you and the credit union have agreed to. So for example, that 40-year loan product, 5-year adjustable, that's a type of promissory note that we prepare. That note is going to be secured by a mortgage. The mortgage is a document that you sign granting the lender, in this case, Triangle Credit Union, a mortgage on your property. So unlike a car, where if you have a car loan, the lender holds the title, that's not the case with real estate. With real estate, you have a deed. You give a mortgage deed to the lender. If you don't pay according to the terms of the loan, then they will foreclose. That is all governed by law. Can we go to the next slide, please? So the closing process is now highly regulated by both federal law and state law. And one of the big documents that we have to prepare in conjunction with the credit union is what's known as a closing disclosure. This is a follow-up, a furtherance of the loan estimate that Ryan has prepared for you after your loan is approved. And on the left-hand side of this page, you see this is an example of a $321,100 loan at 3.25%. And on the left-hand side, you see basic information about the amount of the loan, the interest rate, the monthly payment, projected future monthly payments. Your closing costs are down near the bottom. And then at the very bottom, it's the actual dollar amount that you need to close this loan. This is an actual document based upon an actual closing, based upon an actual P&S. The second page is on the right-hand side, and this, the buyer's column is on the left-hand side towards the middle. And these are your closing costs associated with this loan. And I'll be happy to answer any specific questions about them, but this just goes through all of the closing costs that you need to come up with in order to close the loan. Next page, please. Page 3 is on the left. No, back one. Page 3 is on the left. That's just a continuation of the closing cost. Page 4 on the right-hand side is a summary of the transaction between the buyer and seller. And I'm going to show you another document in a minute, but this is also part of the closing disclosure. These are actual real numbers that exist at your closing. If you go to the top of this document on this page 4, you will see on the left-hand column, it says loan estimate. So in this particular case, Ryan had produced a loan estimate based upon estimated closing times and cost. And you'll see the cash to close that was listed for the estimate was $27,513. The estimated cash to close on a loan estimate is almost always higher than the actual cost because the lender has to account for maximum payments of prepaid interest and other charges. The actual charges on this particular closing are on the right-hand side at the top, and it's a little $24,583. So the estimate that Ryan gave you, as required by law, is brought back and into the closing disclosure, which tells you what you actually need in order to close the loan. Now, the purpose of, and you can go to the next 2 pages, those are basically informational only. It just tells you who's involved and their ID numbers and the like. I mentioned that closings are highly regulated now by the Consumer Financial Protection Bureau, and they require that these closing disclosures be done and they be done properly, and all the lenders have to do it, and Triangle's very good at doing it. The estimate has a certain time frame to be given to you after your loan application. The closing disclosure needs to be given to you approximately 1 week before you close. And the idea of these documents is for you to examine and to make sure that you understand all of the fees and costs associated in your loan, and that there are no hidden fees or nothing that you didn't know about as part of the closing. If we could go to the last slide, and this is an actual, what we call a settlement statement, and this is a balance sheet. So on this particular closing, the seller is on the left-hand side and the buyer is on the right-hand side. But you will see, if you go from the top, the sale price on both sides, in this case, $338,000. You will see a deposit, you will see a new loan amount. This is on the right-hand side. You will see prorations for taxes. You will see all the settlement charges. This document is the balance sheet. So this says the $24,563.72 that you need to close, which is at the bottom of the second page, plus your loan gets spent all on the left-hand column. That is the closing process. So we do a settlement statement, closing disclosure, recording documents to prepare, plus a whole bunch of other miscellaneous state filings and federal filings. That is the closing process. That is a result of being approved for your loan by Triangle and Kathy getting you a good purchase and sales agreement. And I should mention that in that purchase and sales agreement, that financing contingency is very important, because if for some reason Triangle does not approve your loan, then you want to be able to get your deposit back because you didn't, the financing terms were not given, even though you may have believed that you had that financing based upon your pre-approval. And that's about it for me.
Excellent. Thank you, Bob. Really appreciate your expertise. You always do a great job for us. I'm going to ask the panelists to unmute themselves now. so that we're going to take a couple of questions. The first one, and I think this might be for Ryan. The first question says, hello, I have a question. If I live in New York State, can I still do this first-time home buyer program? Ryan, you want to take this one?
Yeah. So with Triangle Credit Union, we're licensed in New Hampshire and a handful of counties in Massachusetts. So if the property falls outside of that footprint, we would not be able to help unless they were relocating and moving here, and then that would be fine.
Okay, great. Thank you, Ryan. The next question comes from Megan. She says, what exactly would you be reviewing from the bank statement? This question came in, Ryan, right when you had that list of all of the different documentation. So she says, what exactly will you be reviewing from the bank statement? For example, maybe an influx of balance?
Yeah, so we really are not, we're really not that interested in what you do as part of your daily life. So we're not really looking at where you're spending or what's coming in and out. The main reason is it's that kind of Jerry Maguire, show me the money. We're looking to make sure that you have or can show the amount of money needed for your down payment and your closing costs. And also just to see if there's any large deposits. Obviously, when you're buying a home, they like to see that it's your own money. If it's a gift, we just need to know so that we can source those funds. So by seeing those, if we saw just all of a sudden a random $10,000 deposit, it just triggers us to make sure that we connect the dots to source where those funds came from.
Okay, great, thank you. This one came in, and actually I think Kathy answered the question in the through the panel discussion, but Kathy, I would like you to maybe address this as well, because the question, if Megan had the question, I'm sure that other people did too. Is an earnest deposit put down prior to an inspection? And would you mind just addressing that one, Kath?
Yes, and Megan, that's a great question. And yes, we give the deposit. Everything is outlined on the purchase and sales. So you and I would say, we will give you the earnest money deposit within 2 days or 5 days of an executed purchase and sales. And it is up to you and I to make sure we get that earnest money deposit within the days that we specified on the contract, because there's a caveat in the purchase and sales, and not that I'm, going over law too much here, but the seller can void the contract and accept another offer if that earnest money is not into them on time, and they can do that, unilaterally, which means they have it on their authority only. So yes, we would get that earnest money in within the time frame set forth on the purchase and sales that you and I crafted. And should you move into a home inspection because your purchase and sale allowed for it, and if you are unhappy, you have 3 choices. You can negotiate the items that were to your dissatisfaction. You can accept the property condition as it is, or you can walk away. And if you choose to walk away, we would do a release of terms and get your earnest money deposit back to you as soon as possible. So that is the short answer to that question. Or maybe that was a long answer to that question. I don't know, but that's the answer.
Great. Thank you, Kathy, very much. Awesome. If you have any additional questions, mortgages@trianglecu.org. That is an email that we encourage you to reach out to. And Ryan actually monitors that, Ryan and his team. So he would be able to, if he doesn't know the answer, he'll be able to reach out to our experts that we use and be able to get that for you. Thank you, everybody, for joining us tonight. Panelists, you did a great job. We really appreciate your time, and we really appreciate everybody who stayed with us for the hour. And we hope that you found this information helpful, and we look forward to maybe serving your home buying needs. Thank you so much, everybody. Have a great night.